Hello, hello.
Hey
Hey,
Dad,
Andy.
hello everyone.
Andy, I'm going to let you take the lead today and be the guide, be the tour guide.
Okay, perfect. I'm excited for this call and thank you everyone for joining us. It is an interesting time in global financial markets. We will be spending some time going over the currency trades as well as the overall environment that we're seeing in that part of financial markets. But um, So Ryan Hinman on the trading call this morning, Dad asked me about the sell-off yesterday, and it's just so wild how we had nearly an identical instance after NVIDIA's last earnings report. I think this time it was a little bit different in that the initial spike in NVIDIA stock was invalidated 30 minutes after they reported, and the initial spike was completely repriced much more quickly. And I think it opened yesterday down a little bit to begin, but then again, just this enormous sell-off. So, very, for many reasons, it's a fascinating time to be a participant in financial markets. So we are looking forward to this discussion. The first thing that I want to ask you about that is, as many folks are joining us from the Intelligent Income program, is that you seem to have made some adjustments in the way that you're trading. And so can you go into that for us and explain a little bit about this approach that's seemingly different than what we've had for the past bunch of months?
Sure. So when we initially envisioned this program, the idea was that we would really take sort of medium-term views and give people uh, time to enter the positions, and it wouldn't be incredibly time consuming. They wouldn't be have to be on top of on top of their phone all day checking messages. So that was the original idea. But you have to respond to markets, and we've had this core long-term view, which maybe we'll address a bit later today in this discussion, that the dollar would strengthen against the euro, or the euro would drop against the dollar for a variety of reasons. But it's been taking quite a while for that view to play out. In fact, far longer than I would like. And we, I felt it was important for us to shift, and there were clear opportunities that we might be able to take advantage of if we started to trade much more opportunistically. So
Hmm.
the idea is not to abandon that long-term core view of euro weakness against the dollar, and we want to maintain a significant position and not trade that, but at the same time, to be able to take advantages of some of the short-term fluctuations in that currency pair. Now, I want to say that as a professional trader on Wall Street, this is actually the exact approach I took. You had your core view, right? And my core view would go across various asset classes, currency markets, equities, bonds, credit default swaps, interest rates, a whole range of asset classes. And I would maintain what I would call my back book. My back book would be the core positions, but then I'd have much smaller positions where I would trade very actively daily or every few days to constantly be generating short-term returns. So I made a decision a week or so ago that we should transition to exactly what I had done throughout all of my career, to really have to see it as two different books: a core book, which is your long-term view, your medium-term view, and then your trading book that you're
Right.
constantly turning over, moving in and out of the market. So that's really the idea. Um,
Okay.
yeah.
Okay.
But
Now, on that note, with both the sort of back book and core position, as well as the more shorter time frame trades, they've all been the pair euro dollar. Can you explain why that is?
sure. So really there's two main reasons. Number one is that if you're going to hold a position overnight, you don't want to pay a cost to hold that position overnight. And with these trading platforms that we have, and this wasn't necessarily the case if you're on a big Wall Street firm, but if you're a retail trader, and we're all retail traders using forex.com or platforms like forex.com, if you are short euro against the dollar, you're getting paid every night a little bit, not a lot, but a little bit every night to hold on to that trade. You're collecting a fee from the platform. But it's one of the few currency pairs where if you're long the dollar, you're getting paid a fee. For most of the other currencies, if you're long the dollar, you're actually paying a fee.
Hmm.
And if we are going to be in a position for a protracted period of time, those small fees can really add up and become quite costly. So therefore, made the decision, given that euro dollar is going to be a core position, and we're going to get paid a little bit every single night to be in that position, rather than paying forex.com for being in a position. So that's one quite important reason.
Okay.
A secondary reason is, when you're just focused, and you know this, Andy, from just trading SPY, when you're really focused just on one instrument, you become very knowledgeable, right? And your intimacy with that instrument gets very deep, right? You learn to know that instrument very deeply. And I thought it would be a good idea for this entire community. I know a lot of currencies fairly intimately because I've been doing this a long time, but I thought it would be a great idea for this community to get to know one currency pair very intimately, to really begin to recognize trading ranges and see how different factors impact the currency pair. So iteration after iteration after iteration, you get to know that currency pair very, very deeply, and you get an expertise. So that's the decision I've made, to just focus on this currency pair for a long time. Now we might also we've traded Canada dollar for before. That's another one where you actually get paid to be long the dollar against Canada. So
Hmm.
that's also potentially attractive. But for the moment, we're just going to stick with euro dollar for the reasons I mentioned.
Okay. And we've discussed in the past, but I'd love for you to give maybe an updated answer, and for those that haven't heard as well, the strong fundamental view that you have on Eurodollar.
Yes. Yeah, that's an important question to cover. Before I jump into that, I just want to say one other thing about the short-term trades, which I think is important for people to understand. And this is really important for your own education. If you notice, when we're identifying short-term trading ranges, what I'm trying to do is identify observations. When I say observations, I mean where this currency pair has been trading, the range it's been trading over the last couple days. So over the last couple days, the trading range on euro dollar has been between, let's say, 117.60 and 118.30. Now, most of those trades, I would say 95% of the time, that range has been even a bit tighter. It's really been between 117.70 and 118.05. So let's say 95% of the observations that we see fall between that 117.70 and 118.05 trading range. So that means if I'm going to short the euro, I'm going to want to wait until it gets towards the upper end of that range. And that's why you see most of our short-term trades have been around the 118 level. And
Hmm.
we take profits somewhere around the 117.70 level. If we're going to be a little bit safer, we'll take profits at the 117.80 level. And I'll make that decision sort of on the spot, depending on how the currency pair has been trading. If it's been trading with the euro tending towards the top of the range, the stronger end of the range, I'll take profits a little earlier, like at 117.80, rather than waiting it to get to 117.70. So my point here is it's really important to identify what the trading range has been over the last few days. What's the low end? What's the high end? You could use charts to do that. Personally, I don't use charts because that's a distraction for me. I know the numbers so well. I know these currency ranges so well. I just look at the way it's been trading, what the upper end is, what the lower end is, and that's how I identify when to put the trade on and when to take profits. So I just wanted
Yeah.
to make that. I think that's a good thing for everyone to keep in mind.
Yep, you're reading the tape. And it's funny, guys. I've asked my dad so many times, can I please download TradingView on your phone? And I'll show him my TradingView and I'll say, wouldn't you much rather prefer looking at price like this? And he says no. And for a while, it really confused me. But I totally get it. And, Steve Cohen, who's one of the most successful hedge fund managers of all time. I think he was maybe at least in the top two or top three highest paid hedge fund managers in 2025. For when he was actually in the trenches trading, that's what he would do. He would just tape read, meaning he would just watch the price, the actual numbers, not a chart. Very interestingly, and so obviously it's different from what we as technical analysis based traders are used to. And I am always, looking at the 5 minute, the 1 hour chart for the currency positions that we're in. But it's fascinating to hear you break that down.
And then
Um,
Andy, a couple other points I want to make that I just thought of as we're having this discussion before I, get to the question that you just asked me.
mhm,
One is, someone might wonder, well, gosh, this core view of a weaker euro against the dollar, why not just sort of abandon it and just and then just do these short-term trades? Why not just focus on that? And the best way I can answer that question is through an example, a personal example. So, as some of you may know, Andy knows very well, 2008 was the best year of my career. And I identified that we were going to have a massive, massive financial crisis in the United States. And I put trades on big, 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 big trades. And those were my core positions. Now, those trades took months to actually, a few months, not, I didn't have to wait 10 months, but I had to wait a few months for them to play out. And if I got frustrated that they weren't playing out quickly, and I was just sitting, basically treading water, maybe sitting on some losses for a few months, if I got frustrated and abandoned that core view, I would have never had that monster home run that I eventually had. So
mhm,
you can't wait. Once you have a strong view, you've got a position on that strong view. And if you abandon your positions, and then a couple weeks later, the dam breaks open and the flood begins, and you aren't positioned for it, you missed it because things are going to move very, very, very fast when it finally moves. And then you're going to be chasing and trying to catch up, and then you start to make all kinds of mistakes. So if you really have a strong view and it's well reasoned and well thought out, um, you just got a position for it, and then do some shorter trades around it in order to generate profits while you're waiting for your view to play out. So I just wanted to mention that. And then
mhm.
just one other point on short-term trading, and this is, you mentioned, I want to make a real distinction between options trading on SPY and FX trading.
Or futures trading on NASDAQ, which we have
or
many
futures
folks
trading
in
on it.
here doing as well.
Exactly. The equity market is a um, is a leader. It's and you're gonna when I say leader, I'm sure no one knows what I'm talking about. You're gonna understand in a minute. The FX market is a follower. Okay, so the FX market takes its cues from other asset classes. So it's if you're trading SPY, all you have to do is look at a graph of SPY. You don't have to look at anything else. If all you do is look at a FX chart, you could easily be misled. And I want to give you an example from yesterday and today of that. So yesterday, we woke up in the morning and Eurodollar was above 118, right? It was above 118. I don't remember. Maybe it was 118.12, 118.15, something like that. And then the stock market started to crack hard and it dropped and it dropped and it dropped. And as it was dropping, what happened to Eurodollar? It also started to head lower. It started to move in our favor. Now, it reached the point where SPY was down over 1%, well over
Hmm.
1%. And I realized, I mean, I didn't just realize in the moment, I was well aware of it, that Eurodollar was following the stock market. Eurodollar did not have a life of its own. It was simply following the stock market. So if we were going to continue to bet that Eurodollar was going to head lower, we would need the stock market to continue to head lower. So we weren't betting on Eurodollar, we were betting on the stock market. Now, if the stock market's already down well over 1%, do you want to actually make the bet that it's going to keep heading lower? Probably not. That's a pretty big move for a single day when there was actually no news. Like nothing happened other than the Nvidia report, the evening before. So I didn't want to make a bet when the stock market's already down 1% that it's going to have to keep falling for us to make more money on Eurodollar. So that's why we took profits. You would never ever gather that type of insight if all you're doing is looking at the FX chart. You have to be monitoring other important variables. Same thing today, by the way. Eurodollar is following equities. Now, we saw that the Eurodollar, anytime the equity market starts to rally today, what happens? Eurodollar starts heading higher. So that's why I put this it looked like a very far off order at 118.40, because if the equity market recovers today, if we close flat on the day, there's a darn good chance our order is going to get filled at 118.40. We're following equities. So these are things you'll never pick up if all you're doing is looking at the chart. You have to know what's going on in the equity market. Also, you should be looking at the bond market as well. I won't get into that right now. Maybe in a future Zoom call, we'll talk more about how the bond market. But that doesn't mean, by the way, that the euro dollar always moves higher when equities move higher. It doesn't mean that at all. But that's the relationship that's been going on for a few days now. And it just
Hmm.
has to do with the way the algorithmic models in the market, that the way they've adjusted their algorithms. So that's what's so Eurodollar. They've put a piece of their algorithm that says buy euro when equities go higher. Right now, that could change next week. These algorithmic models are very dynamic. They're not static. They're always adjusting. So a relationship that's holding today may not hold tomorrow, but it's
Right.
important to be aware of those relationships.
Very interesting.
All right. You asked me a question which I didn't answer. Okay.
Yes, about the fundamental sort of view that you have with Eurodollar.
Okay. So there's several reasons for why I have a structurally bearish view on the euro relative to the dollar. So let's go through those views. First, the US economy has been growing faster than Europe for many years. And ever since COVID, that divergence between the US economy and the European economy uh, has grown. So Europe is growing, let's say, somewhere between 0.5% to 1% a year. That's their GDP growth. Where the US economy is growing somewhere between 2.8 to, let's say, 3.2% a year. And I suspect that that divergence is only going to increase because we are adopting AI technologies at a much faster rate than Europe. So that's reason number one,
Uh-huh.
the growth differential between the two countries. Secondly, both the United States and Europe face some demographic problems. And what's a demographic problem? Well, in the case of the United States, it really is each mother, each family is having not enough children to to prevent the population from declining into the future. Okay, you basically need a little over 2 children per family to have population growth. If you're under two, your population is going to shrink. So Europe is just a little bit over one. Each mother in her lifetime gives birth to a little more than one child on average. The United States is, just under two. So we're not ideal, but Europe is in much worse shape than we are. Now, that's a huge problem for GDP growth. If you have a declining population, the rate of GDP growth is going to slip very rapidly in the future. So this is, we talk about China having a demographic time bomb because they actually have less than one child per mother. Europe is not that much better off. And the way Europe has been trying to offset that problem is through massive immigration flows. Now, we've done that a little bit too, but not to the extreme of Europe. But the big problem with their immigrant population is it is almost all Muslims from the Middle East who practice a very dangerous brand of Islam, political Islam. And in a few decades, Europe is going to be in very big trouble. So this is a big time bomb for Europe. Third reason is the United States has a far more creative entrepreneurial class, and we are at the forefront of many different technological advancements. We in the United States, we complain all the time about our education system and that we're behind some of the Asian countries. There's a grain of truth to that. For sure, our educational system needs to improve. But when you look at our entrepreneurial class and where technological advancements are coming from in the world, they're coming from the United States. And we lead China. China will plays copycat, right? They piggyback off of our advancements and they engage in all sorts of copycat. And in some cases, it's fraudulent behaviors. But we continue to be the leaders entrepreneurially and technologically. There's just no doubt about it. We lead the world in research and development. And Europe is very, very far behind. Europe is not even, top five, and this is going to weigh down their growth rate. So that's another reason. I mentioned already, but I'll repeat it. We're much faster adopters of AI technology, and the faster you adopt AI right now, I mean that is the technology, and and the countries that will adopt faster will leave the rest of the world behind. And we are again, by far and away, of the large major countries in the world, we're the leader. If people worry about China beating us in AI, but China, what is China going to do? China doesn't want AI to go into the hands of the population because
Right.
that becomes a threat, right? So the government is going to monopolize AI for their own purposes, to spy on their own population, to enhance their military capabilities. But they're never going to share that technology with the general population. So there's no way China can keep up with the United States in terms of the way it improves the economy, right? That makes complete sense. An additional reason why I like the US, the dollar over the euro, um, is that we worry a lot about our government debt, right? And by the way, the United States is not unique with this problem. Most of the world spent way too much, and as in recent years, and has a very, very heavy debt load. And we fret a lot about ours. Europe has bigger problems than we do. Countries like Italy and Spain and Greece and France. The United Kingdom's not officially part of the European Union, but the UK has big debt problems, bigger than the United States. Now, if you combine big government debt with sluggish growth, you've got another time bomb on your hands. Because the only way governments pay off their debt is with tax revenues, right? Now, the United States has a chance, because of AI, to grow our way out of our debt problems, right? If we kind of generate really rapid growth over the next 10, 15 years, let's say instead of growing between 2.5% and 3%, we start growing between 3.5% and 4.5%, our debt problem will actually diminish very fast. So we have a way out, which is very fast growth because of AI. Europe doesn't have a way out. They just don't, right? They're slow growers. They have this demographic time bomb. They're not fast adopters of AI. They're not at the forefront of technological revolutions. So this is a big structural problem.
Hmm.
And then the final point, I know I'm going on here with a lot of points, but the last point here that I'd like to make is the US is, I believe, reestablishing itself as the dominant superpower in the world.
Yep.
And being a dominant superpower has always mattered for the dollar. The dollar is stronger when the US military is stronger and when the United States is really exercising and leaving a big footprint in the world in a positive way. And as you can see, what we've done in recently in Venezuela, in Iran, even in between Russia and Ukraine, the only country that is trying to play a positive role, right? That's making an effort to get a deal done between those two. Granted, not very successfully, but at least we're making the effort. No one else is even making an effort at all. So the fact that the U.S. is sort of reasserting itself in the world, I think ultimately is going to be a big positive. Now, I just want to contrast that with the Obama years. Now, the Obama years, people think that the dollar is super weak right now. Well, the dollar under Obama, right? So right now, Eurodollar exchange rate right around 117, 118. Under Obama, it reached 1.60. That is, you had to pay $1.60 to buy a euro, as opposed to paying $1.18 to buy a euro today. The dollar crashed under Obama. Now, there's two reasons for that. Number one, of course, is the financial crisis that Obama inherited. But number two, we were really stepping back from the world, and the world was seen no longer as a unipolar world where the United States was the dominant superpower, but it was seen as a bipolar world where it was a race between China and the US, or even a multipolar world where, it was, a lot of people still today are worried about the BRICS and other countries vying for power on the global stage. But you know, I think investors don't really realize it the way I do. I see it pretty clearly.
Clearly.
The United States is really reasserting itself to be the real hegemon on the global stage, and that is also good for the dollar. So for all these reasons, I think it makes sense to have a core short on the euro against the dollar.
So let me ask you this, Dad, and you sort of just alluded to it, but given the very impressive analysis that you just went through, why isn't the dollar doing better?
Yeah, I mean it's a bit frustrating. It's a bit frustrating, but um, there's there's a bunch of reasons for that. And what I believe that investors, currency traders, they're very focused on a lot of the noise, and they're putting greater weight on what I call noise over substance, the things that really will matter over the medium and longer term. So, what's some of this noise that I think is wrong and off base? Well, number one, there is a view, and if you all you have to do is pick up the Main Street newspapers or turn on, you know, CNN. Uh, the idea is that Trump is isolating America, right? And at the end of the Obama administration, the thinking goes that we had great relationships with Europe, we had great relationships with Asia, right? We had partnerships all over the world, but because Trump has been such a bully, he's isolating America in the world. And we are losing trading partners uh, as countries start to strike deals with one another. Right? China's meeting with Canada. Mexico is meeting with other countries throughout the world to establish trade ties. And as a result, the dollar is not going to be the reserve currency of the world. Right?
Hmm.
All these countries are going to start doing businesses with each other, and it's Trump's doing. But if you actually look at the data, that is not happening. That is not happening at all. Trade continues to be predominantly in U.S. dollars. Central banks have been buying gold. That's true, but they haven't been dumping dollars to buy euros. This is not something that the central banks are doing. No countries are actually saying, you know what, we're not going to trade in dollars anymore. We're going to trade in Chinese renminbi or euros or Mexican pesos. That simply is not happening. And in fact, it may be true that the world gets flustered with Trump, they get annoyed with Trump, but at the end of the day, the rest of the world continues to understand that it's only the United States that is getting things done. Again, I go back to, Trump will get criticized left and right about extracting Maduro. What was the alternative, right? To leave Maduro in power and see this country continue to be controlled by China and Russia and Iran, like that's a good outcome? No, that's a horrible outcome. There couldn't be a worse outcome. So, we're same thing with Iran. Do we want Iran to still be controlled by China and Iran to be spreading terrorism throughout the world? Right? Many people argue it's not our business. What do you mean it's not our business? Iran was on the path to becoming a nuclear power. It's on the path to having a stock of interballistic missiles that today could hit Europe. In a year could hit America. This is good? No, it's disastrous. You do not want to give that type of leverage to such an evil actor. So the world will criticize Trump and scream and kick, but at the end of the day, once the job is done, the world won't say it, but they will be grateful for the United States, and the United States prestige will be enhanced by these types of actions. So again, people are focused on the noise, they're focused on the superficial. I'll give you another example. All this concern about Fed independence being subverted, right? Trump's constant attacks against the Fed chair, Jay Powell, his constant not nagging, but screaming at the Fed for not lowering interest rates. And any time that Trump does that, you see the dollar weaken, right? It happens every single time. But at the end of the day, is Trump actually going to be able to force the Fed to lower interest rates? Well, let me ask you a question. Was Trump successful in forcing the Supreme Court to rule that his tariffs were legal? No, because once someone becomes a member of the Supreme Court, there's nothing Trump can do to that person. Their term in office is secure. The same thing applies to the Fed. Once Trump nominates the next Fed chair, there's nothing Trump can do to him. He can yell at him, he can scream at him, just like he did with the justices, just as he did the Supreme Court justices, just as he's done with Powell, but he no longer has real leverage. So all this fear about the Fed losing its independence, it has an impact on currency markets, but it's noise because the reality is the Fed has remained independent. And you can see that it cut interest rates, but once it felt it shouldn't cut interest rates any further, it stopped. And when you get high inflation prints like you did today, the PPI number came in higher than expected. The odds that the Fed is going to listen to Trump and cut interest rates, they fall to pretty close to zero. The Fed will need better data to reduce interest rates. So again, there's a lot of noise here, but the substance is telling us that there's really not a lot to worry about. But traders are positioning behind it and buying euros and other currencies against the dollar. So these are, I think I ran through, the key reasons why the dollar, the strong dollar view has not played out. But once sort of the noise dissipates, investors will kind of see the reality. And the reality is we have a much stronger economy. Our demographics are better. We are faster adopters of AI technology. We're at the cutting edge of all different types of technologies. And the U.S. growth story is among the best in the world. And the dollar will reassert itself as a consequence of those like long-term drivers.
Amazing. Dad, I'd like to ask you about Iran, and I'm actually seeing some notifications now. I think Trump must be speaking in some capacity.
Okay.
I-
I
I'm
didn't see the
seeing
headlines.
this is from Walter Bloomberg on X,
Uh,
as we both know. It isn't like wildly reliable sometimes, but there's this one: Trump not happy with Iran, but more talks expected Friday.
yeah.
Maybe we'll have a friendly takeover of Cuba, apparently.
Hmm.
Trump says he wants to make a deal with Iran. Trump says there may or may not be a regime change in Iran. So that's what I'm seeing. And I'm seeing, I do think, he must be speaking because I'm seeing some
Right.
volatility in SPY that would indicate that he is.
Yes. So, but by the way, I think one of the things that has been driving SPY that we um, most people are probably unaware of the probable looming war with Iran. And the reason I think that is affecting SPY, if you look at oil prices are up sharply in the last few days. And that's only happening because there's growing fears about war. Bond yields, the 10-year bond yield is now below 4%. It's been, for, the last year and a half, it's been well above 4%, 4.25%. Now it's trading at 3.97%. That is war fear. And so people have been talking about, the AI disruption fears that are wreaking havoc on the stock market. There's a component there, as well, but for sure, fear of war is part of the story. Now, insiders, people who are super tapped in to the Trump administration, are really conflicted about what the Trump administration is going to do. Will there be a war or will there not be a war? So if you look at sort of facts on the ground, in Israel, they are on war footing. People have been told to stockpile food, stockpile water, be prepared for weeks of war. Um, in the U.S. Embassy in Israel, Mike Huckabee, the ambassador, told all non-essential personnel that they can leave the country. Um,
Was it that they can leave or encouraging them to please leave?
well, they didn't force them, but yes,
Right.
encouraging them. Um,
If I were you, I'd get out of here.
yeah, essentially, yes. So, and the carrier strike group, the USS Gerald Ford, arrived today in the port of Haifa in Israel. So that's been a really important piece to the military assets in the United States. So now you have two massive striker groups in the region ready to go. So on the one hand, it looks like war is about to break out.
Hmm.
But on the other hand, we also know that there is a group of Trump advisors who are doing all they can to restrain Trump. They don't want to go to war. And they uh, they're they're really pressing hard on these negotiations. Um, in fact, next week, the negotiations are supposed to continue in Vienna this week, Thursday and Friday this week. They took place in Geneva. Next week, they move to Vienna, and technical staff is going to join those negotiations. And some people from the United Nations, from the International Atomic Energy Agency, who really know the nitty gritty of Iran's nuclear program, will be there. So that makes people think, wow, Trump is very serious about negotiations. So again, people really connected to the Trump administration. You have some people think that war is coming and it could happen any day, while others think, you know what, no, Trump is going to go for a negotiated solution. War can be avoided. What do I think? I'll tell you what I think. First of all, Marco Rubio is due to travel to Israel early next week. So I don't think it's going to happen this weekend. I don't think war is going to break out this weekend um, for a few reasons. Reason number one, I mentioned the USS Ford Stryker Group just arrived today to the port of Haifa in Israel. Optimally, once a Stryker Group lands to its destination, they would like to take a week or two, usually 2 weeks, to get up to speed to really have optimal performance capability. They like to do practice runs, have the airplanes do sorties, practice sorties in order to really to be in game shape, ready to go. So I think Trump will give them time because there's no urgency, right? There aren't people on the streets getting slaughtered by the regime today. That was happening several weeks back, but that's not happening today. So it's not super time sensitive. Trump can wait and be a little bit patient. Um, so that's one reason. Second reason is it could be that Trump wants to wait for the Muslim holiday of Ramadan to end, and that ends on March 19th. Now, why
Mm.
would he care about Ramadan? Not for the Iranians, not for the regime in Iran, but for the Arab nations throughout the Middle East. Maybe he doesn't want to offend them in any way. Maybe in order to get their support, he looks like he's taking, their, religious holiday. He's keeping it in mind in terms of when to time this attack. So that could be a reason why, he holds off.
That's very
Um,
interesting.
yeah. And then finally, the final reason is he probably, or he may, no, not probably, he certainly wants to show people within his own cabinet, people within the MAGA movement, that he did everything he could. He gave Iran every chance possible to negotiate a real solution, but they left him no alternative. So there could be that reason as well. So those are three good reasons why maybe a war is not going to break out this weekend, and it could take, a week or two longer before, or even 3 weeks is possible, but why we may not be there quite yet. Now, let me say this. I do think it will be war. And the reason
Hmm.
why I think it will be war and not negotiation is because Iran continues to do what it's always done. It puts lipstick on a pig. It is actually offering nothing new to the Trump administration in terms of concessions on anything. They are not relinquishing their goals and their plans to one day have a nuclear capability. Number two, they refuse to halt their intercontinental ballistic missile system, which is a major threat not only to Israel, to Europe, but also to the United States. The United States cannot tolerate Iran having missiles that can reach the United States. That's completely unacceptable, and Iran just won't give in to that. And Iran also won't give in to continuing to do their best to finance and and provide military equipment to their proxies, to their terrorist proxies throughout the Middle East and throughout the world. These are non-negotiables for Iran. So there's really nothing to talk about. It makes you scratch your head and wonder why is Trump even wasting his time with these negotiations? And it goes back to the three reasons I gave earlier. Uh, Ramadan, giving the military assets a chance to be super prepared, and wanting to show that he did all he could to avoid war. But a negotiated solution here, it would look identical to the Obama deal, which Trump, vomited all over, a few years ago and continues to say it was the worst deal ever. So I can't imagine Trump is going to repeat what he considers to be the worst deal ever.
Okay. Very interesting. I definitely think it is the case that he needs to give the impression to much of the Republican Party that he did everything he could to avoid war. I think that's a great point. Now, given your assumption or your prediction that we ultimately do that we do get into a war, how would that affect our trade on Eurodollar?
So historically, anytime war has broken out anywhere in the world, whether it involves the United States or doesn't involve the United States, there is a flight to safety. Flight to safety means that so-called quote unquote risky assets get sold and safe haven assets get bought. So that means stocks get sold, foreign currencies get sold, foreign bonds get sold, and everybody rushes to buy US government bonds and US dollars. That is the safe haven. We are the reserve currency in the world. It's our military that protects the world, at least the good guys in the world. So people run to strength, and that's the dollar. Now, it raises the question, why today? So that's holding true today, right? Equities are down. US bond prices are higher. So the flight to safety is working. People are selling riskier assets, but the dollar is weaker. How, against the euro anyway? Why is that? And I think that that is the case because today is the final trading day of the month. Oftentimes, the dollar will weaken on the final trading day of the month as international corporations who tend to hold dollars, they need to sell dollars and buy foreign currency in order to make regular operational payments, to pay workers, to pay service providers, etc. So multinational companies are who do business in Europe are probably, and I've seen this many times, selling dollars, buying euros. But once that flow comes to an end, and it should come to an end by the end of today, and once a war breaks out, I think we'll see dollar strength and that flight to safety kick in.
Okay. Amazing. Is there anything that I didn't ask about that you'd like to touch on for the group?
Um, Let me see. I think I covered everything.
Um,
We could open it up to questions if anyone has questions, and uh, we have your mom here, Andy, as well, in case anyone has any technical questions on using forex.com or anything like that. She is a real expert on that, so she's here as well.
Amazing. Hi, Mom.
Hi, Seth. I had a question. I think I asked you something like this maybe a few months ago when we had a similar call, but uh, two parts. So you're saying that we make a little bit of money by holding the euro US dollar trade overnight. Does it work the other way around if we were short the dollar against the euro? And
No.
then the second part is,
So the
uh,
answer to your first question, Neil, is no, it doesn't. It's only if you're long dollar against the euro. If you're
okay,
sh- if you're the other way, if you're long euro, you pay.
you pay a fee. Okay. Uh, well, that makes a difference. But and I had asked before, but about like on today's options call, Andy was saying, "I'm looking at calls, I'm looking at puts, I'm looking." So he's switching back and forth. Uh, Obviously, your long-term core position and the back position, as you said earlier, is the short the euro against the dollar. But in times like this where it's volatile and it's going against us, so to speak, do you ever reverse that and short the dollar just to capture those swings?
I don't. I don't. If I had a core bearish view on the dollar, of course I would. But I personally never trade against my core view. And the reason for that is you never know when your core view is going to start playing out. So take, for example, yesterday. We saw, we took profits at 117.83 or 84 or so. Let's say yesterday was the day where the euro started to drop and you put this short-term play on and the euro starts to drop and the euro starts to drop and the euro starts to drop and you just got completely wrong-footed and your thinking starts to get clouded when you start when you're a fundamental trader the way I am and you start putting on conflicting views and your short-term view contradicts your long-term view, your thinking gets very confused and your logic starts to break down. The reason I know that is because I've done it. I've made that mistake more than once, and you start really confusing yourself, and your mind gets so it's not a good idea. Now, the difference between what Andy and Nick and Ryan do, they don't have fundamental views, right? They have purely technical views. All their entire system is not based on what they think about their medium term and long term view of the U.S. economy and and the U.S. market. If that was like forefront of their mind, they wouldn't be able to do what they did, right? That their discipline is removing that completely from their mind. They don't have a medium term view and options on the market, right? They don't do that. They don't engage in that. And if they did, it would really mess them up and they'd become, you know, very mediocre or less than mediocre traders. So you've got to be a good trader or a good investor. Consistency is like essential. You have to stick with your framework. You have to be consistent. Your thought and that means just doing the same thing over and over again. And you kind of learn this through experience.
That does make sense, and I understand that. The reason I was thinking it might be different just for short term is because obviously our long-term investments are all along the U.S. economy, in our SPY and, SOX and all those are all long-term. But when Andy's trading options, he still considers puts, even though he wants his long-term investments to go up. So I was thinking just, these one-day trades that were going in and out, you might consider it. But I understand what you just said, though. It makes sense.
Neil, it's not that I'm being stubborn. I wish I could do it. The problem is I can't. Like I know what it does to me as a trader. I cannot be successful that way. That's the problem, right? If I could be successful that way, I would do it in a second. But I know through my own experience that I can't be successful that way. So I sort of stick with what I'm good at, what I've done well, and I throw away. Maybe someone else could, but you have to know yourself. You have to know your capabilities, your skill set, what you're good at, what you're not good at. Um, and part of my discipline is not having short-term trades that go against my fundamental view. Now, I'm perfectly capable of shifting my fundamental view, right? If I had reasons to say, you know what, I feel very differently about the United States now. I think we're going down the drain. Then I would shift. I'd shift my core view and I'd shift my short-term trading strategies around that.
Yeah,
Seth,
that makes sense. I mean, half of it, like you say, is technical and half is psychological, and you know yourself, so you know what works. So thank you.
Correct. Correct.
I've got a
Seth,
quick
Seth.
question for you,
Oh,
Seth.
sorry.
Hey, Jesse.
How we doing?
Good, thanks.
So obviously we feel like, people are going to rush to the US dollar with a safe haven. Do you think it'll be a pretty quick turnaround because right now we feel like the stock market is being held back because of, war threats. At what point does that turn into optimism where all of a sudden, we start to see rallying with the stock market after the war threats are over? It's begun and it's underway, and say the U.S. is obviously making a big impact and it's going in the right direction. At what point do you see it a quick turnaround where we have to be out of our trade, relatively quickly, just to say do we want to be long the US dollar when the stock market is rallying? Or what are your views on that?
Yeah, so we've got a 115.75 take profit level in, right, on our core view.
Mhm.
So we have a natural close built in. If we need to close quicker, we'll close quicker. But that's in there. And the reason I have that in there is let's say war breaks out and we see a very fast, hard move strengthening in the dollar. Let's say it goes to 115.50. Boom, we're out at 75, and then it quickly retraces back to 117.70. Good. So that's why that's in there. But just so you know, that's exactly the reason why we have the take profit level, and I haven't removed it.
Makes sense.
If
Yeah,
we
I
need
was
to
wondering
adjust and move it higher, we'll move it higher. But I think 115.75 is a good enough level. It's not overly ambitious. I think it's reasonable given the ranges that we've been at over the last few months. We've been there. We've been at 114.90. So I thought 115.75 was reasonable, or 77. Excuse me, 115.77.
Yes, 115.77.
Thank you.
awesome. Alrighty, thanks, Seth.
The wife keeps me in line.
And we have a question for you, Mom. A quals said I encountered the FIFO rule and didn't realize I couldn't close my last trade because of this. Maybe briefly touch on why this is and how we can avoid this moving forward, please. Thank you.
Okay, so the way to avoid it is on forex.com. FIFO rules will apply to any trade that has the same amount as an already existing trade. So the way to avoid it is by placing trades, even if you want to make it the same amount, deviate by just a little bit. And that way you still have the flexibility of closing that trade. Otherwise, Forex.com will sort of aggregate them and close the first trade.
They just soak it all week, and the cumulative means it's
The
disgusting.
first trade.
I just teamed to this big one.
Dad, can you mute
Yeah,
Elon?
I'm trying to mute. Hold
Oh,
on.
who's cleaning that?
The cleaning.
There
Thank
you
you. So otherwise, Forex.com will close the first trade placed for that same amount.
Jandy, so can you give an example, like a trade size of, let's say someone has a trade size of 10,000, they did a trade size of 10,000. What should they do for their other trades?
They can, if you want to be, if in an ideal world you would still like to place a second trade at 10,000, do it for 10,100, 10,200, or
And then
9,900.
and then a third trade for 10,400 or 9,900, right? So each trade size is different.
Exactly, and that will give you the flexibility of controlling them and being able to manually close the latest one or whichever one you want. But that's the idea.
Great.
And then we had a question from France that we missed from before. Are your sentiments the same for pound dollar as it is for euro dollar? And would we look to trade it again anytime soon? It's been trending similarly to euro.
So maybe France, you missed this during the main part of the call. I'm staying away from pound right now because when you start to hold it overnight, the costs really eat away. You don't have that problem with euro. Again, you get paid to be short the euro. You have to pay to be short the pound. So if I were going to put another currency pair on, it wouldn't be pound. It would be more likely be shorting Canada against the dollar. But as I said, for now, we're just going to stick with Eurodollar. I think it's really helpful for everyone to start to really understand the ranges for your own learning, to understand them, to kind of develop a real expertise. And maybe after some time of really getting an expertise, we'll take on a second currency pair. I think that's the best way of doing it. Also, for the purposes of risk management, okay? By the way, I've traded currencies my entire professional career, but I've never led a group of, how many people do we have in this program, Andy?
160, I want to say.
I've never led a group of 160 people in currency trading. And, you know, several people got forced stop outs on trades, right? And that's not something that I ever had to deal with my career. One of my 160 clients getting stopped out. So when I start managing more than one currency, and it's more variables, and I have to worry about your risk management excessively, and it's kind of taking my attention away from other things. So for my own purposes right now, it's really helpful for us to just be managing one currency at a time until people really get up to speed with their ability to manage risk, to understand, so they don't get forced stop outs and things. And the more currencies you add, the more risk you run of getting forced stopped out. So we're going to take this little by little by little. It's a learning process for all of us. But yes, we will look at other currency pairs, but the next one will probably be Canada, not pound.
All righty.
Seth, can I ask you a quick question?
Yes, Alan.
Sure. I was talking to a Schwab guy, and he said that their investment advisors were saying that the European market will be going up over the next, he originally said 8 years, and then he said 10 years. So if the market, you're showing all the new innovation, everything is pointed to the US. So if the market in Europe is going to, he says he feels it's going to do better than the US, which is hard to believe, but he said that's what their people say. then doesn't that mean the euro is going to get stronger, not
Well,
weaker?
I completely disagree with that. Number one.
Okay.
The only reason they think the European stock market will do well
Over the
is
next 10 years,
no,
too.
I understand for only one reason. It's incredibly cheap. Now,
Oh,
the
right.
reason,
Exactly. That's why he said that. Yeah,
but you
you're
have
right.
to ask yourself, why is it incredibly cheap? What if you go into a store and you see a product
Right,
that's
right,
really
right.
cheap? Why is that product cheap? Usually because it's a piece of garbage.
Right.
You know, if you go to a nice hotel, it's going to cost more than a garbage hotel. You know, when we and Andy, when Janny and I used to take Andy around to all his hockey tournaments, we stayed in some very cheap hotels, and Janny would cry every time. But really, that's why they're cheap. So there's a thought process that, wow, look how cheap Europe is. What a bargain. It's going to do great. You know how long investors have been saying Europe is going to outperform for the next 10 years? They've been saying it for the last 10 years.
I know. That's why I got out of all the European
Yeah.
mutual funds and all ETFs, everything I got out of it. But then he's telling me now's the time.
Yeah.
So,
Yeah.
okay. All right.
But the other thing to mention is that oftentimes stock markets do well when their currencies do badly. So I'll give you a great example of this. The Japanese stock market has actually been doing quite well. It's because it's so cheap. It's because the Japanese stock market essentially, didn't move from, let's say, 1990 until 2022.
Oh my God.
But since then, it's been doing very well. But the currency has been falling out of bed. It's gotten absolutely rocked. Okay. And the truth is, if you're an American and you're long Japan, your stock market gains have been completely offset by the currency weakness. So if you're an American and you've been long Japan and all you're hearing is Japanese stock market is the best performing in the world, so why is it that I've been holding Japanese stocks and I'm not making any money? It's because their currency has been crashing against the dollar. So just because the stock market does well doesn't mean that the currency does well. There's a lot of factors that drive a currency. And like we mentioned here, what's been happening recently when the stock market in the United States goes up, the dollar's been going down. When the stock market goes down, our currency has been rallying. So the currency, when I say you have to follow, you have to understand what are the relationships. Why is the dollar weakening? Why is it strengthening? And many times it moves inversely to the stock market. That can be confusing, but that's the reality.
Okay. All right. Thank you.
Thanks, Alan. All right. What do you think?
All right, guys, we'll go ahead and wrap up here. Thank you all for your time, attention, and engagement on this Friday afternoon. We wish you a phenomenal rest of your Friday and weekend, and let's have an amazing March. All righty.
Thank
Dad,
you all.
thank you.
Andy,
Mom,
You guys
thanks
are
so
doing an
much.
amazing job.
Danny, thank you.
This
Thanks
is
everyone
this
for
is
joining.
this has been amazing. Thank you.
Thank you, Jesse. Take care,
Absolutely.
everyone.
Thank you.
Appreciate you all.
All right,
Take
thank
care.
you. Take care.